Hey guys, how you doing? Skyler Garman here, owner of Pro Seal in Pennsylvania. So we're located in central Pennsylvania. I got a ton of stuff to bring to you guys today. So I want to talk about my experience in the asphalt realm. It's a little bit unconventional, and I probably didn't take the realm that most people got into this business. I see a lot of you guys. I speak to a lot of you guys every single day. I hold lots of events and I have people here at my business, and I see a lot of the guys that bootstrap it from the beginning. So for me, I bootstrapped the work, but I did not start the company from day one. I purchased my company, and it's something that I didn't realize I was going to be so passionate about when I started, because it was just an innocent chain of events. Really, that's how Pro Seal started for me. It was me transitioning from one business that did really well and was very successful at one point, and I was just looking for something different. I was looking for something more stable. I was looking for something that I knew was going to be here over and over and over again, and the industry didn't change. Even though we've advanced in the asphalt world, it's still asphalt. It's the same product that we've had year over year for hundreds and hundreds of years, right? We have been paving and laying asphalt, maybe not in the same manner, but with the same ideology. Asphalt dates back super, super long, and it's the same thing over and over again. So that's what I was looking for when I was transitioning from another business. I ran a product-based business that was a little bit more volatile, and there was lots of trends. There was lots of things that I was constantly chasing, right? I did not have a pothole's a pothole, a road's a road, paving's paving, seal coating, crack sealing is crack sealing type of business. I lived in a world where it was never very, very consistent, and it was very consistent if you were chasing the next thing. And I wanted something that I could look at day over day and do the same thing and know how to run the business. So for me, my story happened innocently, organically. I didn't really set out and say, hey, I want to own an asphalt business. I hopped on a group text with a bunch of my friends. A lot of you guys that know me closely, I see some of these names on here, guys. You know the story. Some of you guys, this might be the first time you're hearing it. But I hopped on a group text with a bunch of friends, and I looked in my local community and I said, guys, I need to find a quote unquote side hustle. That's one thing I'll come back to as well, side hustles. At this point, though, I knew it wasn't going to be a side hustle. It was going to be a transition for me. It was going to be something I started on the side, but I knew long-term it was going to be a full-fledged transition, and it wasn't just going to be something that was going to distract me. I guess I'm not coming back to it. Side hustles are really a waste of your time, and a lot of people don't success because they have way too many things going in the one thing that they're really good at, and they have their attention drug out on a bunch of other things. But anyway, so I hop in a group text with a bunch of my friends, 3 to 4 of my friends, and I say, hey guys, I'm really looking for something that I want to transition into. My product-based business is great. It makes me a lot of money, but I think there's more to life, and I want something that's more steady. I'm sick of chasing the next thing. I'm sick of adapting to the curve. I'm sick of coming at, all these different angles. So I looked around my town and I looked for businesses. I thought about a construction business or a general contracting business, thought about home flipping as real estate came very easy. And I've done, probably 5 deals at this point. And I had lots of friends in real estate. So real estate for me was very attractive, with my circle of influence around me. But it just wasn't what I was set on. And I was looking for something at the time that I thought was going to be, very low barrier of entry. So it was like, how can I get started in something and actually give it a go without forking out a ton of cash? So I looked around my town and I finally came around to the asphalt guys. And as you guys would know, or, the industry terminology, we didn't have too many people that were doing it right. We didn't have too many people that truly, truly, truly cared and knew how to run a business. We had what everybody knew as gypsies, right? It's still a very common thing. Guys, we see them all over the place. I hear it over and over and over in the industry of, everybody using this term, and, they kind of get hung up on them. And I looked at these guys, and instead of getting hung up on them and saying, hey, this industry is no good, or this industry is just full of people that don't know what they're doing or don't care or whatever it is, I looked at it and I seen opportunity. And for me, when I looked at the opportunity, it was, there's guys doing this, so there's a demand. There's multiple guys doing this. Actually, there's kind of a lot of guys doing this, so there's a large demand for the service. And then I also looked at, are these guys, quote unquote, successful? And to your typical small business owner, one-man band style, the success was there, right? At least the trace of money was there. I don't know about success in my terminology, but the trace of money was there from the guys that I was looking at, right? Driving new Corvettes, driving motorcycles, having new trucks and things like that. That was there. So I knew there had to been profitability into this realm. I just wasn't quite sure what it was. So in this group of, friends of mine, I text, I'm like, hey guys, I think I'm going to get into asphalt. I think I'm going to get into like some seal coating. And they were like, Skyler, you're crazy. Why are you doing this? You don't even have to get out of bed if you don't want to at this point. Your business is very well established and it's very passive. I didn't have a large team, but it operated independently. So in this, I looked at the opportunity and I was like, hey, I think I'm going to just buy a seal coating rig, and on the weekend, I'm just going to start seal coating. If I blow 30 grand, I blow 30 grand, and it is what it is. So I text this to my friends. I'm like, hey guys, I'm going to buy a seal coating rig. I'm going to start seal coating. They're like, you're insane. Why are you doing this? And I had one friend, he's like, hey, I don't think you should do that. I know a guy. And for me, I was like, yeah, that's cool. Like, great. A guy, I'm not that serious about it. Like, I'm just going to try my luck at what I'm going to do here. He's like, no, Skyler, I think you should really sit down and speak to this guy. He has a seal coating business. He's like, I can get you a truck. And I was like, you don't have a truck. And he's like, yeah, but I know someone that has a truck that's done this. So as I have this conversation, I sit down with the gentleman that formerly owned ProSeal. His name was John. And I was literally not interested in buying the business at that point. At this point, I was interested in spending $30,000 and buying a seal coating rig and trying it on the weekends. And if I messed up, and I burnt the money, right? It wasn't a huge loss. So I sit down with the guy because, I guess I was just trying to be nice because he tried to link us together. Not interested in buying a business at this point. And I sit at the dinner table. And at this dinner table, we discuss the business. We discuss the ins and outs. We discuss what it looks like, how it works, all of these different things. And I'm talking to him, and I just didn't find what I wanted yet because, again, I wasn't interested in the business, and he was interested in selling me the business. So majority of the conversation was about why ProSeal and the organization that I bought should be mine at that point, right? He was trying to sell me. It turned into a sales consult. So it was very like, it was a one-way street because he was trying to sell and I wasn't that interested and I was just being polite. So as we go back to this time, I'm not interested at all. And this is 2 hours probably into this dinner. And he says, hey, why don't you come take a look at my shop? My shop's like 10 minutes down the road. And I think that you could really, really benefit from taking a look at my shop. So I go back to his shop and I take a look around. And what I seen was the start of what I believed was possible. I seen the start of a branded truck. I seen the start of logos and uniforms. I seen the start of more professional service. At this point, I thought this was it. I really, really thought that this was the thing. I was like, yep, this is exactly what I'm trying to do. I knew I could make it better, but I believed at this point it was better than what I've seen so far. And when I seen that, my intuition of wanting to start this business with the alignment of what I thought was possible in this industry went a little bit too far. So I get to negotiating the business, and this was 4 years ago. I get to negotiating the business, and we start talking numbers. And at this point, he's throwing numbers around, and I had no idea what any of them means. We had, lots of discussions of how much revenue he was doing, and, push and shove, and what his bottom line was, and what equipment he had. And then he wrote me a list of equipment on a piece of paper, and he put values next to them. And I started to understand, and I tried to do my own analysis. And in my own analysis, I looked at some of these numbers, and we started negotiating price. And in this price negotiation, I went off of lots of things. So I looked at the equipment I thought he had, what I thought the business was worth, and then these generic terms of 2 to 3x net income or EBITDA. And anybody that doesn't know what EBITDA stands for is earnings before interest, taxes, depreciation, amortization. So, which can be a very misconstrued number if you don't have a quality of earnings or very, very accurate financials. So long story short, I buy a business that had roughly $250,000 of EBITDA and like a $400,000 top line. So if you look at that, the margins were very high, and I was very excited. I was like, oh man, this is great. This is, a business that prints cash. But in this, we took the financials that we did have, and we went to local CPAs. And the local CPAs we had did not specialize in any type of private equity, nor did they specialize in M&A or anything like this. To be honest, I don't know if they've ever been involved into the transaction of a business now, looking back. But at this point, I was referring to people I knew that may or may have not known something about buying businesses. Maybe they've bought businesses, but they haven't bought businesses that were, in the $1 million plus range where I was, spending money. And we went and got these businesses evaluated, and I got evaluations back from $750,000 to $1.4 million. So there was a huge swing. It was almost double the price. So long story short, we came to right around $1 million-ish evaluation when I purchased the business off of the local CPAs, accountants, financials, things that I had, and the knowledge basis that I had at that point. It was right under $1 million. I think like 970,000 or something of that sort. It was very close to there. And there was some upside to the deal, right? Which I'll get into. And it's another thing that I think in the moment made it attractive to me. And it's another thing that now that I understand how this game actually works, there is a different train of thought is the best way to put it. So anyway, one thing that made it attractive as well, and one thing that I'll discuss here that makes it attractive to lots of buyers and sellers, and it's why I'm so passionate about helping you guys, right? We see this all the time now. Private equity is becoming a super huge thing. And private equity at a large scale and a small scale, you're starting to see micro private equity now, which are guys that have maybe millions or maybe not a lot of money even, but they're still buying businesses at scale without spending a ton of cash. And it's what makes it really attractive. And it's what makes me want to talk about it for you guys, right? These guys here are kind of winning the game because they're not spending a ton of cash as long as they structure their deal right. But then you also have very large private equity firms where, to give you an example, an actual private equity company, somebody that's large, that's worth hundreds of millions of dollars, they aren't looking at a business unless it has more than $1 million of EBITDA. So $1 million of EBITDA is when they start acquiring. So in our world, that's probably about a $5 million top line business with a 25% bottom line, somewhere in there. So you're looking at like a $5 million top line, $1 million net take home, right? EBITDA. And there is lots of unknowns in that. But then anything kind of under that, which especially businesses that have under $350,000 of EBITDA, because at $350,000 of EBITDA, this is where like the micro private equity firms start jumping in, right? So now it's not guys that are worth hundreds of millions or billions of dollars, but it's guys that are worth 50 million, 100 million, guys that have cash to spend. And they're understanding how to play this game at a little bit of just a smaller scale. So now, in that $350,000 range, there's guys that are starting to play this game with just a little bit smaller chips. But the opportunities under that become significantly wide open because there's not a lot of people that are touching it. So under $350,000 of EBITDA is wide open for the general person, right? Again, my business, I bought $250,000 roughly of EBITDA, of what I thought was EBITDA at the time. And when we discuss what EBITDA is, I think especially in the transaction of a business, there's lots of things that factor into EBITDA and the valuation. But to go back to help you guys understand where businesses get valuated and what they can actually transact for, at that $1 million of EBITDA in a service business, private equity firms are paying 10x multiple, roughly, for your business. So if you have a $5 million business that is doing $1 million of EBITDA, the private equity firm, a large private equity firm, is going to pay $10 million for your business. At that $350,000 of EBITDA, you're going to get a 2 to 3x multiple. You might get a 5, maybe, but it depends on intellectual property and things to discuss. And under that, you're at a 2 to 3x minimum of EBITDA. Let me pause there for a couple seconds, and I'm going to go back and make sure I answer some of these questions here because I see a ton of stuff over here in the chat. And I will get back to how we go into evaluating your business. So what do we got here? We got Michael Winley. Will 1 ton of hot asphalt from the plant fit in the bed of an F-150? Pothole repair. Let's go. Michael, I think you can haul 2,300 pounds or somewhere in there in a 150, if I'm not mistaken. Ton of asphalt should be slightly under 2. Volume-wise, it should fit. It's going to be a little bit messy cleaning out and that type of thing, but yeah, it should 100% haul that. I would just check the haul sticker on your model and just make sure that, it's going to haul 2,000 pounds. John Shugs, what up, brother? How are you? Derek, how are you, brother? How are you? Mr. Matt, thank you guys for all the love. Glenn, everybody here. Matt Phillips, yes, 100%. Just be better, brother. Just be better. That's what it takes, especially in our industry. So, that's definitely one thing to understand. Just be better. We got Billy here. Skyler and Dom. Y'all the Starsky and Hutch of asphalt. Y'all are the Starsky and Hutch of the asphalt world. Great to get these nuggets of info. Thanks, brother. Always, always, always a pleasure. Anybody? What else do we got? Okay. Yeah. Dom as well. He did say rent a dump trailer, Michael. It will definitely save your back, especially on shoveling, and it'll be probably a little bit cleaner. I know our local rental companies, some are not fond of us putting asphalt into a dump trailer, and some are fond of us putting an asphalt into a dump trailer. So just check and make sure, of course, always return it super clean so, they just don't get aggravated. But yeah, it would definitely help, especially dumping asphalt, depending on the size of the holes. You're going to be shoveling a couple ton is a lot. We had 2 guys shoveling a ton today, a ton and a half. And, still that's a lot of shoveling when you're doing smaller patches. I don't know what size you're doing, but if it's a little bit smaller and it's not wide open, you're probably going to have to shovel it. But if it's wide open, rent a dump trailer and dump that stuff right in the hole, brother, and rake it, compact it, make your money. But yeah, I got some notes as well, guys, that I'm going to keep referring to. And I just want to make sure that when I was going over this stuff with you guys, that I was hitting the key points of truly understanding what this world means. I'm starting to see a lot of people that say, hey, how do I sell my business? Hey, I want to sell my business in 2 years. Hey, I want to sell my business. Hey, I'm looking to buy a business. I've spoken to some of you guys that have been asking to sell your business. It is very, very interesting to me. I'm always looking for deals. I'm always looking for businesses that make sense. Because once you understand some of this stuff, you truly understand how to play this game. So, one thing as well to any buyer or seller, on the buyer side, it's going to be making sure you're getting your enterprise multiple, right? You're getting your most financial multiple when you're selling your business. So how we heard it can range from 2x to 10x. You want to get as far close as you possibly can to a 10x. And as a buyer, you want to make sure that you're paying as close as possible to the actual market value or under as a buyer. So due diligence is a large thing in the acquisition of a business. Due diligence is 1,000% one of the most important parts to a buyer, especially because they're going to be checking the qualities of the business. So they're going to be checking future vision. They're going to be checking for a growth plan, future vision of a business. As an investor and as a seller, the seller needs to know where the business is going and what the actual plan is. Because as an investor, if the investor isn't looking through it in your lens and your eyes, they might not see the full revenue potential that you see because you've been in this for 10 years, 20 years, 5 years. I don't know. Typically, we see a 3-year turnaround on a business. You want to have 3 years of financials, and that's your preparation point of selling a business. So then you want to have a growth plan. Where are you growing and what are you doing? Very similar to a vision plan or a future plan, but you also have to have a growth plan. And the growth plan is the strategic plan behind getting to where you say it's going. So when you're looking at the future plan, that's the 5-year plan, right? That's the ideal business in 5 years. But then the growth plan is very similar to like the 18-month plan that we write, right? Where we're reverse engineering that future plan. So we want to say we need to do this action, hire this people. We need to hire 2 more crews, or we need to fill these key roles. And that's going to be your growth plan. Earnings growth is another huge thing to look at when you're buying a business. So to be clear, when I bought my business, guys, the future plan and the growth plan was, the future plan and the growth plan was the business can grow. We've went up in revenue every year by at least 10%. So when I bought the business, that was the growth plan and that was the future plan. Earnings growth. Earnings growth was great when I bought the business. So earnings went up year over year. Top line grew, which is something that an investor, especially a strategic investor, is going to look for. And it's something that you guys should look for when you're purchasing a business. Because typically when a business is slipping is not the time to purchase. You want to see a business that has an upward trajectory, so you know that there's arbitrage on the table, which means basically that when we spend, say, $1 million, or we take $1 million of our own capital and we could raise another $99 million. So now you have $100 million. You could go buy $300 million businesses for 30% down. So you could put 30 million, 30 million, 30 million, and finance the rest from an institution. And now you could have $3 million or $300 million of assets off of $1 million, right? So that's the first level of arbitrage. And just say, for example, those businesses are growing by 20% annually. What's going to allow you to do that over a 5-year plan is the business is just doubled now. So now the original $1 million that you had is worth $600 million. In 5 years, you can sell those businesses, you can pay off your note, and still probably put a couple $100 million in your pocket and start over again without anybody else's money, or just at a larger scale. Because now instead of starting with $1 million and raising 99, you're starting with 200 million and you're raising $1 billion. And this is where these private equity firms and these things get super, super large very quick. The most number of billionaires are in private equity firms, guys. So if that tells you something, there's a game of arbitrage there, and there's a lot of money to be made on the table. Take a short intermission again and go back to some questions, because I want to make sure that I'm providing you value on all fronts, right? This is kind of my specialty and my niche. I love taking business owners from $250,000 to a sellable point to $1 million plus. That is my niche. So if you want to go, guys, scan the QR code below and let's hop on a call, because I'd love to take you there. It is something that I've grown significantly passionate about, because I made a mistake, and that's where I'm going to with this stuff, guys. I learned from my mistake, though. I'm the one that purchased $1 million business that was probably worth less than that because of little mistakes. It cost me hundreds and hundreds and hundreds of thousands of dollars, like hundreds of thousands of dollars. So for me to be able to save that for you guys and to be able to fast track this, I want to see you guys put those hundreds of thousands of dollars in your pocket. So let me help you get there, especially if you have a business that's doing $250,000 or more. It's very, very much my niche. I love the higher level stuff. I love helping people evaluate deals and review financials. And I'm not the best, right? Once it gets to a certain point, that's where I have my team, right? I have the team behind me, and that's where I have the industry partners. That's where I have the right people in the right positions to make sure that these calls are correct. And it doesn't just come down to financials, right? It comes down to industry partners. It comes down to guys like the coaches and girls like the coaches, right? It comes down to people like Judd, who's been in this industry for a super long time. People that's exited, it's people. These are the people that you need to speak to. And successful exits too, guys. Anybody has. A lot of people think they have a business, but not too many people have a business that's actually worth something. Let me answer some of these questions. We will pick up there. Would you spend the money on buying a dump trailer or a hot box for pothole repairs? Brother, I would buy John Suggs. Would you spend money on buying the dump trailer or a hot box for pothole repairs? I would buy a hot box that is dumping capable or dump mounted. That is the best, because now you're buying both. especially a hot box with a chute that you can hit holes, over and over and over again. You can just dump right in. You're not shoveling a ton, or you're going into a wheelbarrow if you're in a tight spot and you're not shoveling. So yeah, I would definitely buy a dumping capable hot box is what I would buy. We were literally just speaking about this today, me and Mr. Dom, my partner down here with ProSeal. And as I'm on that topic, guys, Dom is 100%. I'm speaking about a lot of super higher level conversations right now. And Dom is the guy that a lot of you guys come in at right now. You guys are coming in at, hey, I want to start out. I want to do something. I want to get this thing off the ground like I did when I was saying, hey, I want to buy a trailer and try this out on the weekend. So if you are that guy and you need help setting up insurance, you need help forming an LLC, you don't know if you should be an LLC or an S Corp, you don't know where to start, how to market, how to get your first job, how to do those things, Dom Manzo, he's my partner in this whole deal, and he will help you get set up to come have the conversations with me about how to get you to successfully exit this thing, because that's where the money that is life-changing in this world actually comes, guys. And when you exit, it doesn't mean that you need to exit once and for all. It doesn't mean that you need to take all your chips off the table. It means that you can take some chips off the table. And that's what makes it very attractive, because you can retain equity in a lot of these deals and then find somebody that's done it. And now instead of taking you from, 0 to 250 or 250 to $1 million, they're going to take you from $1 million to $100 million. And 10% of 100 million is way more than 100% of $1 million. So that's where the arbitrage part takes place. Mr. Matt Phillips, I bought a guy out and his equipment. Then he rebranded and opened up another name. Make sure you have a non-compete for 3 years. I signed a 7-year non-compete, actually, with a mile radius as well, because that was super important. And I needed to make sure that that same thing was not going to happen, because when we buy people out and we just buy their equipment and we don't buy a ton of, stuff with it or business with it, that's what they do, right? And they will take your money and burn you, and they'll be the next, guy knocking doors, trying to steal jobs, doing the thing. And now you just have a significant amount of overhead, depending what you spent, or you had a significant bill that you didn't need to acquire, because if you were going to just win by marketing, you should have just dumped the marketing dollars into marketing. Replying. We got Greg Brown is also suggesting, he said, John Suggs, I do big infrareds with a 2-ton hot box all day, every day, 6x8 machines. I price them $165 to $225 per repair. Greg Brown, infrareds are great as well, especially in combination with a hot box or anything like that, because it will help extend your season. It'll help recycle some of those materials, especially in the winter when we're looking for opportunities. Stephanie Bison. John Suggs, dump trailer can be used for installation and broken. So if it's one or the other, maybe a trailer, but a hot box is definitely a must. What are your thoughts or opinions? Yeah, I mean, it's a good point. Typically, I did away with that because I just put a dump body on my regular pickup truck, and then we'll have a hot box as well for the hot material. So we're putting our broken in there, or depending how large the project is, we're getting someone to haul it for us. But it is super nice because majority of the plants do take your rip. So when you are ripping something out and you are saw cutting and getting rid of it and you're replacing it with fresh asphalt, the same place that you're going to buy the asphalt from, majority of them take them. In PA, I don't think we've paid yet to actually have our asphalt that we've removed taken. I used to pay when I didn't know a ton. I used to go to different yards 30 minutes away to dump asphalt, and little did I know, all these asphalt plants actually wanted all those pieces back so they could recycle them and sell them to you again and make more money. It's free. So that is one piece that is important as well, especially if you're starting to do larger stuff, of how to get rid of it. Glenn Shock. It is good to learn from people who reach their goals by making mistakes. This will let us avoid the mistakes they've done and then cut the learning curve in half. Scan it and learn the trade faster. 1,000%. I wish that I would have had the mentors and the people in my life that I do now years and years ago when I was buying this business. I would have made a better decision. I don't know if I ever would have bought it, because I don't know if we would have ever came to terms. But I am not upset, because it allows me to give you guys this information. It allows me to be very passionate about this. And I think it's also what excels me in this world, because I didn't have the experiences that I did without the mistakes I made. And that's what's given me my personality. It's what given me all these learning lessons. It's what's given me all these experiences. It's what's allowed me to shape into the person I am, to have the platform to be able to sit here and speak to you guys about this stuff. The reason I get to do this is because I've probably lost $1 million over this purchase, and you guys still have some ignorance debt on that. Alex Hormozy, it's one of the greatest sayings that I ever learned, right? And it's one thing that I love now, especially when I have dialed in my focus of what I'm doing, is the ignorance debt. Because once you start to make some success, right, the shiny red object always comes along. And before, it used to be really appetizing. And the shiny red object comes in multiple things, right? Staying in your own lane. It's exactly what I was saying in the beginning. When I was trying to get into this, I wasn't doing this for a side hustle to make some side cash. I was doing this for a side hustle to transition into my main hustle. And the ignorance debt on that is not knowing what you're doing. And that's where hiring mentors cuts that ignorance debt in half, right? The reason that I get to be on this platform and speak about some of these experiences and share this stuff with you guys is because I have $1 million of ignorance debt paid down. So for every $1 million that I've lost is $1 million worth of lessons that I get to teach. And it's $1 million worth of knowledge that I get to share, where maybe the next person along may have only lost $100,000. So if you look at it from the $1 million of ignorance debt, you have $900,000 of ignorance debt to get to the $1 million level, right? And again, the reason the business has grown and is growing significantly every year, anywhere between 25 to 50%, is because of those things, of those hard lessons, of the constant grind and push. And, we have grown into a 7-figure company with upwards trajectory of, multiple 7. It's very, very possible that we could hit a multiple 7-figure year this year, guys. So, it's one thing that I get to share with you guys, and it's one thing that I want to help all of you guys get there, to get out of just making money and making a paycheck and actually changing lives. And if you ask anybody on my team, when I speak about these things, they all know that this ride is including them in it. They're included in this ride, right? There's nothing more than I want to do is to sell this business for $100 million and retain some equity of it and give 20% away or whatever away to my top performers. And it's life-changing money, guys. And we do it again because we're really good at it. Think about it. What happens when we have $100 million of ignorance debt? $1 million businesses or $10 million businesses or $50 million businesses are probably just a walk in the park. So we can do it over and over and over. And I talk about my team now, and you talk about arbitrage. We can go back to that. The arbitrage on people at this level becomes significantly increased, right? If a $50,000 employee can make you $150,000, if a $100,000 employee can make you $500,000, if $1 million employee makes you $3 million, right? That's another way of what we call arbitrage or key person arbitrage in businesses. And when I bought my business, I thought I had people there, but I didn't, right? It was the owner, his wife, and 2 kids that were not retainable, that didn't have true skills and were not key people in the business. So I bought coaching of how to seal coat, really, and some blue sky money of a customer list, which is what we refer to as enterprise value. Again, that's one thing that affects the multiple of your business is enterprise value. And the more intellectual property or central intellectual property you have, the more the business is worth. So the more customers you have, emails, phone numbers, addresses to, the more records you have, which comes to my next point of when you're buying a business, is record keeping, especially financial. And we're talking dollar cost record keeping, and we're talking unit cost. How many gallons of sealer? How many gallons of paint? How many pounds of crack fill? How many skids of sand? All of these things are things that come in. And then it comes on to a profitability standpoint of what were your top 25 contracts and what were the profitability on those contracts? Not just, oh, here's a P&L at the end of the year, guys, right? Like a lot of businesses can have a okay CPA accountant and that hands them a P&L at the end of the year and they said, oh, I made whatever, 15%, 20%. But in the meantime of that, right, like you got to have the right data to be able to analyze these things. I was just speaking to someone semi-close to me that's looking for $1 million for their business. $1 million, guys. Very similar to ProSeal when I bought it. And I started asking him questions. I said, hey, what is the gross earnings? What is the net earnings? And he's like, oh, well, it's around this. Oh, well, it's around that. I said, okay, great. Do you have a quality of earnings that I could take a look at? Yeah, my accountant has all the information. I want $1 million for my business. Guys, if you're asking $1 million for your business and you can't spend 10 grand to get a legit quality of earnings, you're probably not going to get $1 million for your business. And for me as an investor, it does not seem like the right way to take. If you can't show me a quality of earnings of saying, this is why my business is worth $1 million, and here is the broken down financial report of why I won $1 million. Here are the things you're investing into. It's probably something that the people don't want to take a look at. I don't want to go talk to your accountant. I don't want to deal with that. I want to look at a financial report and say, is this business worth what he's asking? Yes or no? And in a very 15-minute overview of the financials, do I want to continue this conversation or do I need to reality check this guy and tell him that his phone number is worth 10 grand because I just am willing to pay 10 G's for the leads and that's it? But that's where most people's businesses are. They're a phone number and an operator. They're the key man. They're key man risk, right? If they leave, the business falls. That's a huge problem. What else we got here? Thank you for dropping the Hotbox link, team. Thank you for keeping everything rolling in the background so I can read these comments and we can keep dropping value to everybody. And I'm pretty sure, I don't want to speak out of context, John, but I'm pretty sure those Hotboxes are on sale. I don't know if the sale ended yet, but I know there was a sale on them. So it's probably a good thing to invest into at this point because I'm pretty sure it was actually a like summer blowout. So yeah, I would probably check that link out. We got Derek. Can't wait till I'm at the point where this side hustle just has me at 100 to 150,000. Yeah, man. And I challenge you. I challenge you to think bigger. Like 100 to 150,000 is easy, brother. I promise you, it is easy. There is guys doing 500,000, $1 million their first year with the right people around them, with the right influence. I know you were just at our shop here this past week, bro. And, I really, really appreciate everything. It was awesome you stopping by while you were in town to say what's up. So, making sure you're hanging around the right people is amazing, bro. Keep hanging around the right people, because that 100 to 150,000, it will be light work for you. And I believe that you can do 500,000 way quicker than what you believe, as long as you expand the way you think. Most people don't realize how much money is out there. Most people don't realize how much they're leaving on the table. This world is unlimited, guys. It is unlimited. So make sure you're keeping the thought horizon wide. We got Mr. Matt Phillips. 3-ton hot box on a Isuzu truck with an infrared made me 45 grand last year. Exactly what I'm talking about, guys. Hot box, infrared unit, a truck making you 45 grand. You're telling me that investment doesn't pay for itself. That's awesome, brother. Mr. Billy. Started on a 1-lane dirt road looking to take this mofo to the Autobahn. Billy, you're funny. You've been you've kept it fun in the comment section, brother. John Suggs. Just to keep feeding your passion. If you had $40K to throw at equipment for a seal coat asphalt repair business, what would you buy? I have some, but others could use help. Blowers, skid steer, trailer, roller, finance, rent until cash flow. I know there's lots of variables. It's very interesting. Bro, if you want me to be honest with you, it's going to go back to buying a business. I think that you could probably find a business that is cash flowing probably. Oh, man. Give me a second here. 40K. I'd probably say around 100,000 net. You could probably find a business that's doing 250,000 gross, $100,000 net, and you could put 20 to 30% down on the business. And instead of having to deal with finding leads, because most people really suck at it, find a business that already has a ton of organic traffic that's already cash flowing, so you don't have to leverage it all, right? We can wrap a ton of money into equipment, especially newer stuff. And I know you're in the painting side of things, so you have, some knowledge in this world, right? You are a, avid business owner. You're not just getting started, so it's not completely new to you. But if it was me, I would go find a business that's roughly doing 250,000, $100,000+ of EBITDA, and understand what the variables are in that business. Understand what the owner's paying himself. That's another thing, guys. When you're buying a business, but I would take that kind of like, Matt said that he bought a guy out, and, I'm sure that acquisition probably wasn't a ton. Matt, I don't know if you're comfortable sharing or not what your acquisition was on that business that you bought out, but I'm sure it was probably not a ton, right? Because these opportunities are everywhere. And especially now, we can talk about this morning with the stock market crashing 1,000 points. It's an interesting time, guys. It's an interesting time, but the largest transfer of wealth are made in these times. The largest transfer of wealth are the people that understand these things. There are tons and tons and tons and tons and tons and tons and tons of baby boomers retiring daily. There is tons of people that are getting washed out with the tide in these times. They can't sell or market, and it is draining them. Yeah, Matt, 18K. So, John, that's a prime example. You could have bought 2 businesses maybe of guys like that, and maybe they were both netting 100 grand, and now you have $200,000 net. But as long as it's a legitimate $200,000. So if it was me, I would 100% probably go find a business or 2 maybe, and put 20 to 30% down on it and 100% go buy the business and start executing on the work that's already organically there, because you're going to cut out a lot of that process. You're going to have leads coming in day one, and you're going to be able to get arbitrage, because now you take two businesses that have $100,000 of net income or EBITDA, and you take them and combine them together. You now have a business that is $200,000 of net income or EBITDA and $250,000, say, gross a piece. So you have a $500,000 business that you just bought for $40,000, and at $200,000 EBITDA, right? Which is where I'm saying, is very close to 300, right? It's only 150 away. So if you could buy one more business, you could hit that 350 and maybe start trading at a 5x multiple already. And guess what? You didn't actually even put in a ton of work. You weren't out there bootstrapping, grinding, killing yourself to get to the $500,000 mark that most people are, right? You position $40,000 to get to the 500,000, and maybe you grow it by 20% for a couple years, and next thing you know, it trades at a 5x, and the $40,000 you invested turns into 350,000, say at a 5x multiple, north of $2 million, somewhere in there, right? 1.5 would be 550 times 5, 250, 1.75. $1.75 million for a $40,000 investment. Guys, that is where the private equity world gets fun. That's where the investments get fun. That's where the arbitrage exists. But you just got to know what you're doing. Dom Manzo. They can always sell jobs and find performance partners like ProSeal to execute high-ticket jobs. 1,000%. That's another thing. If you're a marketing machine, John, which it seems like you already are, bro, like you're killing it with paint. You have a brand that's growing and expanding daily. I'm sure this is just a cross sale for you, bro. Really, like I'm sure majority of these guys that you're painting lots for and parking garages and all of this stuff are probably like decision makers or owners on parking lots that need asphalt assets maintained. So, it should just be a strict cross line item. And then instead of investing a bunch of money into equipment, you turn it into a large ROI profit and you reduce risk significantly, right? Value equals risk over predictable income. You take your risk away because you don't hold no overhead or equipment, and you find guys like, us that will perform the work for you, and you just take cuts and margins off the top line. It becomes a very, very attractive business model as well, too, where profitability is pure profitability because there is no real overhead to the existing organization on operating costs. It's just a cross sale on a ticket item of something that you would already be doing. So, yeah, it's another great point. Matt Phillips says he would buy 3 RY10s and a 700-gallon seal coat trailer. Yeah, man. I mean, the basics, right? That's what we need. You're probably going to need a billy goat and those type of things as well. A couple wire brooms, couple brooms and stuff like that. So one of like the starter kits, but yeah, that's the basics you need to get started in this world. If you do not want to buy a business and you're just looking to buy equipment. Mr. Billy, a year ago, I was working out of a 93 Buick Lesbar boss ride and now got a new HD truck, investing into equipment, and it's slowly paying off. Looking forward to what the next year brings. Bro, and you're not even rocking full time yet, man. You got what? I think 3 months till this is your gig. You're doing this on nights and weekends around having a full-time gig, bro, and supporting your family. Wait till you can focus on this 100%. You're seeing the gains pay off first year. You're seeing the investments being made. You're seeing the growth and trajectory happening now. Brother, wait till you have 100% focus. Something we say here at ProSale is the power of being all in. And it's one thing that'll change your life. When you can take blinders and you can put everything into the one thing, right? And you can say no to the woman in the red dress over and over and over and over again. and you can focus strictly on what it is, right? Like asphalt's it. Asphalt is it. We might cross sell in asphalt. We might go patching, paving, line painting, seal coating, crack fill, and we have line items inside of that box. But this is it. This is our world, right? This is what we focus on. I'm not starting a side hustle. I'm not buying bars with my friends. I'm not investing into real estate on the side, like on a ton of different things. I have some real estate. Some of it was, just positioning when I transferred. So I'm going to be like an HDD kid first time saying this guy. Oh, man. But yeah, guys, it is something that is very, very, very lucrative. There's lots of money to be made, and there's lots of opportunity. Just like that example that we gave with Mr. John of where you can take $40,000 and actually position it into businesses. There's people buying and selling all day long, right? And it's a constant thing. And especially now, it's a very, very hot thing because there is tons of people retiring every day that have no real exit plan. And one great things, the reason that a business owner would ever take 20 or 30% down, right? Some of you guys might be calling me crazy, like, who would ever sell their business that's worth $1 million and only take 200,000 up front? I would almost guarantee you 90% of them would take 200 grand up front and then let you pay them residual where they would hold the note, and the old business owner becomes the bank for you because they don't want to pay capital gains. When you take a hit like that and you sell a large asset, it is very, 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 very taxing, literally, like the IRS taxing on your income. So when you sell a business like that, you got to pay capital gains tax. But when you sell a business like that and you take dividends of that sale over time, you're spreading out that income gap, right? Where you have to pay capital gains tax, and that is becoming significantly smaller. So most people's financial advisors and tax accountants are going to say 100% take that deal and let's get you residual income and let's earn interest off of it as well too. And most of these times, like, you're going to be able to negotiate the interest with floor and ceilings because they're not truly holding any debt notes if you're buying the right businesses, right? You're buying a business with all assets paid off, or they will be at time of purchase. So when the owner is holding this debt note, if you say, I don't know what Fed rates are right now. I think there was some dip in Fed rates. I know it was like 9. Now it's probably closer to 5 or 6, maybe 7. I don't know. I don't know where it's at right now. But say Fed rates are at 7%, right? It's very attractive to, probably get a 3% note, a 5% note where you're actually paying under a federal rate. Me personally, I made sure I had a floor and ceiling clause on my interest payment when I bought the business. So I will never pay more than 5% interest on my note, and I will never pay less than 2%. But I'm paying way less than, Fed rate loan or a HELOC or whatever else that, most people try and leverage their money on. So a lot of guys will pay that, and it's also just residual income for them, right? Imagine retiring, right? Putting 200 grand in your pocket and then getting $5,000 a month for the next 10 years. Who wouldn't want that deal? When a guy's 65 years old, 70 years old, he's probably going to be dead in 10 years. Like, he can sustain its retirement plus Social Security. He's good. We got Billy. Just got a commercial pressure washer this past week to help with the striping and cleaning work. 100%, bro. It's another great line item and great crossover. If you aren't giving options, you're giving ultimatums. It's another one of my favorite sayings that I say to my sales teams. I think that you should be offering pressure washing as an upsell on every single job. So you can have base rate. Let me come in and blow the lot off and paint. Let me come in and pressure wash the lot and clean it and it'll be the best adhesion for prep, and maybe it's double the price, but you can start price anchoring, right? Least, highest, and middle. And whatever you put the middle ground to, right? Say if your lowest is $5 and your highest is $9, if you make the middle ground $8, they're going to lean towards the highest because they're going to say, wait, I can get double the service for only $1 more. Or you do it lowest at $5 and you do the middle ground at $6 and they say, wait, I can get double the service and it's only $1 more. You should be upselling that commercial pressure washing or the pressure washing with your commercial pressure washer on every single job, brother. So it's just another way to drive revenue and make your average ticket go up, because the only way to grow a business is to make every customer worth more or to get more customers. And getting more customers are super expensive. And in today's world, apparently is super hard, because we hear this over and over. So it's another great thing. We got Amy. Great job, Skyler. Teeny watched the whole thing with me, and she says she misses her best friend. Tell Teeny I said hello. That is my number one fan, guys. Miss Teeny is 100% my number one fan. Spot's been taken. Sorry. Billy. A lot of these older guys cooked the books and didn't take a great P&L, I'd assume. So they don't know what they have. Most only value the physical assets. Yeah, great. Don't take a great P&L. 100%. Most of these guys don't know what they have, and those are the businesses that I offer 10 grand to for their phone number, and that's it, right? That's the only thing they're worth. Their physical assets aren't worth squat, because without the business and the reoccurring revenue, they're a liability. They show up like crap on my balance sheet. It's just another, depreciating asset if it's not already been fully depreciated. So then it's just a pure liability if I can't even get a tax write-off on it. So yeah, their phone number is worth $10,000 because they have people that call them, and that's it. So yeah, 100%. It's why financials are so important. Hey, Cameron, any tips on pricing for crack filling and seal coating pricing to stay competitive? How many square feet is enough to give a discount, and how large of a discount? Crack filling and seal coating pricing. Okay. I can tell you my seal coat price can vary by triple, 25, 50, not triple, 70, like 2.5 times. My seal coating price varies by 2.5 times. So say if it's $1 a foot, and I'm using very high numbers, right? $1 a foot to $2.50 a foot. It could be 25 cents to 65 cents a square. But that really depends. Those numbers are very deemable on what your business really needs. And we need to just worry about what your business needs. So, roughly 2.5 times can be roughly the variable. So it can swing a lot. The smaller the job, the more expensive. We start breaking pricing at 10,000 square feet. So we carry that straight through. And again, it lowers, say by, 20% every chunk or something like that. It's another thing. If we can throw that link up again, I go through financial counseling and financial coaching on the business of understanding how to create a P&L, understanding the EBITDA stuff, understanding how to build a job costing calculator for all of your jobs based on your business's requirements. You need to understand what it costs you an hour to produce this work to understand if your profitability or if you're profitable or not. Guys, the link is down below. So again, the prices can swing a ton. If you're interested in buying a business, if you're interested in selling a business, I'd love to help you. I'd love to work through some of these things. I'd love to give you my guidance and pointers. Again, I've owned and built multiple 7-figure businesses, multiple, businesses in different realms. So I have the ignorance debt paid down, and I think that I could help a ton of you guys achieve what you're looking for. Thanks again, guys, for coming to this week's Coach's Corner.